they're saying you're good unless you're on the save plan. And this is where this caveat comes into play. I have met people who have met their 20 or 25 years requirement. And the profile of this person is typically they were on the revised pay as you earn plan before it became the save plan. They met their 20 or 25-year requirement at some point, and then the save plan went into forbearance. So they're sitting there and they have enough credits to have their student loans forgiven. And based on the current guidelines up to this point, they could have transferred their loans over to income-based repayment and had them wiped away. But they kept them in save because they're hearing all these horror stories about people who have met that threshold, but their loans aren't wiped away and they're still having to make payments. So their thought process was, I'm going to stay and save where they're not making me make payments. And when I hear that they're starting to process forgiveness again, then I'll transfer it over to the income-based repayment plan. Well, first, in this notice, the department is not saying that they will forgive loans that are in the save plan. That's not part of the deal. So if you're in save and you're eligible for forbearance, at some point you got to come out of that plan to have them wiped away. But the timing of when you move them is very important based on this status report. It says in subpoint B, and I quote, for avoidance of doubt, defendants agree that for their internal purposes, when a borrower has one, achieved eligibility under the SAVE plan, and two, applies to transfer to one of the IBR, ICR, or pay plans on or before December 31st, 2025, and three, that the application is approved on or after January 2026, the date that the borrower becomes eligible for cancellation under the new plan constitutes the effective date of their loan discharge, even if that date falls on or before the date the borrower's application was approved. End quote. Now, that was a lot, so let me break it down for you. What they're saying is, let's say you're moving from the SAVE plan to the IBR plan, and you're eligible for forgiveness under the SAVE plan. Loan forgiveness is not offered through SAVE. You have to switch to another plan. And they're saying in this status report that if you switch from SAVE to IBR, they consider your date of forgiveness when you're eligible for forgiveness under IBR. So if you transfer your loans from SAVE to IBR and you're not yet formally on IBR before January 1st, 2026, you're not considered eligible yet. It's based on when you're eligible under that new plan. This is really important because if you're one of those people on SAVE who's eligible for forgiveness, but you have been waiting to transfer your loans, you need to do it now. You need to move from SAVE to an eligible payment plan, because if you move and for whatever reason there's a delay and that repayment plan isn't listed under IBR until 2026 or later, that debt that would have been tax-free from a federal level is now taxable because you waited too long. But if you get that loan transferred onto the new plan and it's listed as under that plan before 2026, you're in good standing.